Okay, so here's our next episode of Harlem Stories. I'm Robert Lazo. I'm with Adam Feinberg. And today we are going to talk about what makes lending different in Manhattan.
Yeah, lending in Manhattan is kind of it's a confusing thing because everyone sees all these great interest rates advertised on the internet, and not that there's anything wrong with like the rocket mortgages of the world, but in most cases it's not going to work in purchasing a Manhattan property.
Why not? Because there's a great rate, and it's like all I have to do is click and fill in the information. So help me here.
So, companies like Rocket Mortgage, they are really set up and established for the rest of the nation. And, in really kind of breaking down some of the specifics of that, is that, first off, before we get into the specifics of the building, and the lenders, I want to make a distinction here and point out that lending in Manhattan requires two different sets of approval. So number one, the bank is looking to approve you as a buyer. And number two, the bank is looking to approve the building. Not all lenders are going to approve all buildings. And, that a lot of times requires certain types of specific lending, and not every lender does that.
Can I ask why banks won't automatically approve a building?
Excellent question. So that gets into a very technical answer, but let's kind of break it down to the components. So in most of the country, there's what's known as agency lending, and most people don't necessarily know what that is, but they probably have heard the different components of it. So agency lending refers to government agencies that are backed or are by the full faith and credit of the United States government. A good example of that is going to be Fannie Mae or Freddie Mac. And they are, basically guaranteeing that the mortgages will be good and paid out, and there are certain guarantees on that, and that is a certain standard, and it applies to roughly around 95% of homes that are in the United States. Now, there is about 5% of homes left over that don't meet those same standards. And if you want to purchase a home under those standards, you're typically going to be looking at either private lending or what's known as portfolio lending. And you could wind up working with a major bank or perhaps maybe even an internet lender that might be comfortable doing portfolio lending. I can say a lot of those low advertised rates that you see on the internet, those are usually going to be agency lending. And, without getting too into the weeds on agency lending, I can tell you they have very, very specific, lengthy requirements to underwrite on a particular property. And what happens is in New York City, a lot of times the banks, will look at the individual buildings and say, this doesn't meet the very rigid requirements that Fannie Mae requires or Freddie Mac requires or FHA requires. And the reality is when that's the case, they'll say, we can't underwrite, unless, of course, they offer portfolio lending.
So let me kind of clarify a couple of things. When you say agency lending, we're also talking about what are commonly called conventional loans, correct?
Conventional loans is an entirely different category. Conventional loans tends to deal with the dollar amount. This is really about the underwriting standards. Conventional lending versus jumbo lending is a different topic altogether.
Okay, so I gotcha.
So, agency lending is like, for instance, some of the requirements they might have. They might say, we require the building to build it into their reserve, not just any year, but every single year. 10% of their monthlies that they're charging need to go toward a reserve account. Now, what happens if the building has got a substantial reserve account and they've paid for all their large capital projects? Do they really want to still keep paying down toward an additional reserve, or do they want to keep their monthlies lower for their, for their owners? And a lot of buildings will go say, to hell with the lenders. I'm like, we just want to keep things reasonable and affordable for our owners. And that's where the most value is going to be for our owners. Understanding the fact that not everyone is going to want to lend in that kind of situation. But that's where portfolio lenders come into play. And that's a very small percentage of the national market. However, it's a very large percentage of the Manhattan market. And, the reality is it possible to find some banks that will underwrite under the agency lending in New York City? The answer to that is yes, it is possible. It's going to be a smaller percentage of buildings, and it's only going to be condos.
What's the ballpark on these percentages? So it sounds to me like agency lending, you're saying is majority is going to be condos that are going to get those types of loans?
So agency lending, first off, they're not going to underwrite in a co-op because it's shares in a corporation. It's not real property. So that eliminates co-ops from the entire agency lending platform.
Okay, so in other words, chances are I'm not going to get a loan from Rocket Mortgage for a co-op.
Exactly. Yeah, Rocket Mortgages, and unless they've changed and updated the procedure, but then again, that's not going to be the low advertised rate. So even if Rocket Mortgage does offer it, because it's a whole different category of mortgage type, it's not going to be that same great rate that you see on the internet.
And if I was just happen to get that great rate on from Rocket Mortgage, it most likely would be a condo.
Exactly, either a condo, actually, or a townhouse. It's not going to be a Manhattan one. It'd probably be outside of that because now you're getting into conforming versus the jumbo mortgages component. And again, that if it's conforming townhouse, it's not going to be that same kind of price range, for the Manhattan market. You might be able to get that to work in the really outer portions of Brooklyn or Queens or maybe even the Bronx, or Staten Island, but it definitely would not work in Manhattan.
Okay. Do we want to start talking about finding a lender?
Well, let's get a little bit more into portfolio lending first. So portfolio lending is a different market. It basically means that the lender is going to hold on to that mortgage once they've underwritten it, and they're going to hold on to it for themselves. The way much of the mortgage market has worked in the last few decades is that they all get bundled together and put together in different risk tranches, and the investment banks will bundle them together and then sell them out as mortgage-backed securities. Now, unfortunately, there's now a kind of a taint to the mortgage-backed security world due to what wound up happening, in the 2008-2009 crash, when people stopped analyzing the risk associated with underwriting and a whole bunch of the underlying mortgages. Don't want to get too deep into the investment banking world component of this, but basically, the banks did not hold on to the mortgages themselves when it came to agency underwriting. So they'd sell it to another entity, and they might get paid to service, the monthly billing and collections, but they wouldn't necessarily hold on to it. So the risk was no longer theirs. Whereas in a portfolio lending situation, the risk is entirely theirs, but they're a lot more flexible as a result, and they're looking at every individual situation uniquely. And as a result of most buildings, first off, as we said, co-ops, because you're not buying real property, your shares in a corporation, they're not going to qualify for it. And in fact, co-ops technically are not even really truly a mortgage. Everyone refers to it as that, but they're really just a private loan, and a hefty one at that. But because they're not real property, they're actually just a private loan, which is one of the reasons why the agency lenders, which is going to be the Fannie Mae and Freddie Mac, you don't see that as a buyer up front. You might go to like Citibank or Chase, and you might not know the difference. But if you go to Citibank and Chase and say, hey, I realize I'm buying in New York City, I realize it might not, conform to the regular standards of an agency lending. Do you do portfolio lending? And in most cases, in the big banks, they'll say, yeah, we do some portfolio lending. And, and especially if they know, if you're using a local banker here, they'll definitely know that, and they'll definitely look up the building. They have their own building databases and, go through that and they'll be able to make that determination whether they can do agency lending or whether it's going to be portfolio lending. But I can tell you this much: portfolio lending is definitely a much smaller market. There's a lot of lenders that won't do it, but if you're using a local New York City banker, it's far less of an issue. Again, it comes down to what we originally said when we first started this conversation. There's going to be two sets of approvals, one approving you and one approving the building. So when a portfolio lender is reviewing the situation, they're taking both those factors into account. With portfolio lending, the interest rate is typically going to be a little bit higher. It's not going to be the same great rates that you saw on the, for the rest of the country, but that has more to do with, the fact that our buildings don't exactly conform to the same standards as the rest of the nation. We're a vertical living situation where everything is shared. Our plumbing, our electrical lines. Everything is so much different, and the way that we need to adapt to that vertical living situation is so very different than in a traditional single family housing.
So when a bank is evaluating a building, what you're also saying is that they're evaluating the wherewithal of that building and the chance that that building might fall into default or there may be problems?
Yeah, absolutely. Because the reality comes down to is they're going to ask for a building questionnaire to evaluate it if they haven't previously evaluated it or if they haven't evaluated the building recently. So, they'll go into, they'll ask about, how many commercial units might be in the building, is everyone paid and up to date? They'll ask for the building financials and review that and things like that. So they're going to do their due diligence on the building and make sure that they feel comfortable lending.
Okay, good.
So I guess the last part that you discussed was, how do you find a lender? So, I think that could be, broken into a few different ways. Most important is that I think that you're using a Manhattan-based lender. So if you bank with Chase, go to speak to Chase from a Manhattan-based lender. Don't call the number, the 1-800 number on the back of a mailer that they sent you. Go down to a Chase branch and actually speak to somebody, or speak to it if you have your own banker. With Chase, speak to them. So that's one possible route. Another route is, speak to your agent. We develop a lot of relationships. We don't get compensated for it. However, we do know what works and who works well with what kind of buildings. So if I have an international buyer, I know that typically one of the first routes I'm going to go to is going to be United Nations Federal Credit Union, or I might go to Guard Hill because I know they work great with international buyers. Or, at one point, and I think it's a little less so now, HSBC. They were specialists for that. Or if I'm working with an income restricted building, I have lenders that specifically specialize in that. Whether maybe you are work with, you own your own business, there's going to be bankers that specialize in, working with small business owners. So, your agent can be a good resource in kind of guiding you in terms of who might be some of the better bankers for your personal situation. But you can do your own research too. But ultimately, if you do your own research, I do recommend just keeping it very Manhattan centric.
Okay, that sounds good. And of course, it's Manhattan-centric because they're familiar with the buildings that are here in Manhattan.
Exactly. Yeah, you want somebody that's really going to know how to do this. And one of the reasons why we suggest, going with some of the lenders that we have is not, for no other reason than we know what works, we know who works well, and we know who can get actually the deal closed.
And when you talk about, because oftentimes we hear these terms like lenders and underwriting, when you're talking about lenders, we're just basically talking about banks like JP Morgan Chase, Citibank, Wells Fargo.
For the most part.
First Republic.
For the most part,
Okay.
yeah. I mean, like I think every situation, will be different and unique. There are mortgage brokers out there, and like Guard Hill, serves in that purpose. I do have another firm that I recommend, that is also a mortgage broker, and they are exceptional at what they do, and they're great, especially if you got a building that's very difficult to underwrite in. And there's and we can discuss in other talks, and like, what makes a building difficult to underwrite in or easy to underwrite in. But, ultimately, the long and short of it is usually it's going to have like, great financials and, commercial properties or not, you'll have everyone paid up to date. The building has got a reserve fund, so these are just the basic fundamentals.
All righty. Anything else that we're going to add?
No, I think that's the most important part. But, if you have any other questions, just always feel free, reach out to your broker. If they don't have somebody that will lend, in your situation, we'll help you find somebody that will be able to lend. Because we can always get, in almost every buyer situation, we can almost always get financing for a particular buyer. The key asterisk to that is, what kind of premium do you want to pay on the interest rate? So that's the most important part. So yeah, if you want to keep the interest rates lower, of course, obviously the better credit, the easier the situation would be.
So just a quick recap. So again, we talked about when the bank is making approval, they're approving both the borrower, you as a purchaser, and the building. Mm-hmm. And then, of course, there are essentially two types of lending to be aware of as a purchaser. There's agency lending, which is what is more common outside of Manhattan, and there's portfolio lending, which is more specialty and more common to inside of Manhattan.
Correct. Yep.
And then finally, when it comes to finding a lender, focus on a banker or a person who works exclusively in the Manhattan market so that you can find someone who actually can essentially underwrite the right particular type of loan.
Yeah. Ultimately, at the end of the day, we want to make sure that the lender that you're choosing is somebody that is actually going to be able to get the deal done and do it without a lot of pain.
All right. Well, thanks, Adam. And thank you for joining us. This is another episode of Harlem Stories.